here at Collective, and Collective is your all-in-one tax solution for your small business. We will form your business, we'll form you into an S corp, we'll handle your payroll, your bookkeeping on an ongoing basis, and your business tax filing at the end of the year. So we're a great, just sort of efficient machine for self-employed business owners. But today, we actually have a fun little event called Tax Tuesday. And it's the best day of the week, in my opinion. And essentially, it is an AMA. It's an Ask Me Anything. And it's an Ask Me Anything specifically about taxes, about running your business, about any sort of like general financial matters or anything like that. And before we get started, it's important for me to say that this is an educational, sort of just informative session. Don't take this as, official tax advice or legal advice or anything like that. Before you act on any of the information I'm getting ready to say, consult with a tax professional, a CPA, an EA, a tax attorney. Taxes are extremely complicated, and don't take this as official tax advice. You really need to sit down with a tax professional and go over your specific situation before doing anything official. But now that we've gotten that out of the way, let's get started on some questions. And the first one, how can I write off my P&M in this year itself? I don't know what that is. Let me do a little bit of research and go on to the next question, and I'll get back to that. I'm not sure what P&M is. Can I still backdate an S corp election this year? Well, the only way that you could conceivably backdate an S corp election for this year, because it's pretty late in the year, is if you've had an LLC in existence for the entirety of this year. You can only backdate an S corp election essentially to the creation of your LLC date. So if you're just kind of running as a sole proprietorship or anything like that, there's no entity to backdate any sort of S corp election on. You can't be an S corp for 2023 if you've remained a sole proprietorship. So what we would do is set up an LLC now and elect S corp tax status going forward in 2024. So, and let's say that you've been in existence, or let's say that you have an existence, an LLC, excuse me. Let's say that you have had an LLC in existence for the entirety of 2023. You can theoretically still backdate your S corp election, but usually at this time in the year, it's impossible to find anyone to do it because people are scrambling, like kind of getting ready for the deadline, the end of year deadline. So most tax attorneys or accountants just simply aren't available to do that for you. It takes a lot of work. Also, it's a little bit riskier to backdate so far in the year. It can be more likely for the IRS to reject that S corp election when it's that late. And also the last thing is tax professionals that do backdate an S corp election this far in the year can charge pretty hefty fees. I mean, they can charge, up like between $6,000 and $10,000 to even do something like that. And usually that kind of eats away at a lot of your S corp tax savings for this year anyway. So, for most people, it's typically a good idea to just go forward for 2024 and be an S corp election going forward. All right. What can I do now before the year end to make sure my taxes are in order for 2024? Excellent question. So for one, especially when you're a self-employed business owner, it's one of the big important things is your bookkeeping, making sure that your bookkeeping is in order, because your bookkeeping is essentially having a good understanding of how much money you've made and how much business expenses you've had, because you're not taxed on the money you make, you're taxed on the money you keep. You're only taxed on your net income. So let's say that, from January 1st of 2023 until the end of the year, people have paid your business a total of $150,000. You're not taxed on $150K. You're taxed whenever you're left over with after you've written off your business expenses. So let's say that you have 150K in income and you have another $50,000 in business expenses, like marketing cost, software cost, the home office deduction, all that stuff is business expenses. And you write that off from your income. You now have $100,000 net income, and that's what you're taxed on. So that's the first thing, is making sure that you know your net income, making sure that your bookkeeping is in order. Second thing is taking any advantage of retirement account contribution deadlines for 2023, for this year. Because in certain sort of self-employed retirement accounts, they have a deadline of December 31st of this year to put back more tax-free income. What you contribute to your self-employed retirement accounts isn't taxed. It lowers your taxable income. So those are two big things that I would keep in mind. Also, too, pay as much as your taxes as possible that you owe in 2023 before 2024 gets here. Because if you're a self-employed owner, really you're supposed to pay taxes in like quarterly installments. The first quarter, second quarter, third quarter, fourth quarter. But the fourth quarter is actually, it ends January 15th of 2024. So you technically have until then, but I wouldn't wait that close to the deadline because you could get penalized if you miss it. So those are the three main things that I do to take care of your business. If you're an S Corp, make sure that you're prepared to file your S Corp tax return, by March 15th of 2024. That's another good thing to keep in mind. How much do CPAs usually charge for cost segregation? Well, I don't have a lot of experience in real estate tax, but cost segregation, if I understand it correctly, is it kind of gives investors the chance to accelerate depreciation, like being able to write off depreciation expenses off on their properties. And to be honest with you, I'm not really sure what a CPA would charge. I mean, I would say, like, for bookkeeping services like that, I'd say maybe like $500 a month, something like that. But that's just, general, kind of up in the air. I'm not really sure. I didn't file my taxes last year. Am I in big trouble for the 2024 tax season? No, you're not in big trouble. Now, it's not the best. It's a good idea to file your taxes as soon as possible, because here's the thing too. Let's say you didn't file your taxes for last year. So I'm assuming you mean 2022. If you owe taxes on that 2022 return, you're getting penalized right now because your return isn't filed. They're charging you failure to file penalties. They're charging you failure to pay penalties and things like that. But they're charging that to you on what you owe for that year. So if you don't owe anything, then it's not a huge deal, because there's no penalties or taxes. There's no penalties. There's no taxes to be penalized on. If you've already paid your taxes for 2022, there's nothing for them to penalize you on. However, they still want you to file your 2022 tax return. They want it. Because eventually what will happen is if you don't file that return, the IRS will eventually just file a return for you. And they're called substitute for returns. They're called SFRs. And what they do is the IRS, it takes all the income that has been reported under your name to the IRS, and they file just an automatic tax return for you. They don't give you any tax deductions, any business expenses, or anything like that. And you typically owe a bunch of tax because your return isn't filed correctly. So no, you're not in big trouble for the 2024 tax season. Theoretically, you could probably go ahead and file your 2024 return. Your 2023 return. I mean, theoretically, you could do that. It's a better idea to go ahead and file the 2022 one first, just in case, because you might have a loss and it might carry forward to your 2023 return or anything. But long story short, you're not in huge trouble, but it's something that I would take care of as soon as possible. Monique has a great question. Can I revert back to LLC status from an S Corp? My business didn't do well this year, and I spent most of my income on operation cost. Monique, you absolutely can. You can end your S corp election. And how you would do that is because this year, I'm assuming you mean 2023, you have a S corp tax return for 2023, and that will be due by March 15th of 2024. On that S corp tax return, essentially what you do is you mark it as a final return. And that kind of lets the IRS know that this will be the last year that you'll be considered an S corp, and your S corp election will end. And you don't have to file any S corp tax returns, run payroll, or anything like that. But the only thing is, to keep in mind that you can only elect S corp tax status on an LLC once every 5 years. Every 5 years, you can only do it one time. So if you go back and you end your S corp election, you can't elect it again for another 5 years. So just be sure to make sure that that's really what you want to do before you do that, because you'll leave money. Let's say that in 2024 you make more money, or 2025 and onward, you'll leave money on the table by not being an S corp. Now it is possible to just set up another LLC and make an S corp election on that one. But a lot of people usually don't want to do that. They want to keep their LLC, keep their EIN number, keep their business name and all that. So to be honest with you, Monique, just generally, if you think that you're going to do well next year, I wouldn't end your S corp election this year, because it's already 2023. It's already pretty much done, and you still have to file your S corp tax return for this year. So if you don't think that you're going to be making enough money to where it's going to be worth it long term, then go ahead and end it. But if you think that this is just temporary, that your income has gone down temporary, then I would stay in S corp. I have an H-1B visa, but also am a non-active owner of an LLC. How can I navigate this coming tax year with my H-1B restrictions? I apologize, but I honestly have no idea. Like, the H-1B stuff is extremely complicated, and the visas and whatnot. I would go to a tax attorney or a CPA that specializes in stuff like that. Okay. What are the drawbacks of becoming an S corp? Well, that's a good question. I don't get that one very often. I wouldn't call it drawbacks, but I would say that when you're an S corp, there are sort of additional administrative requirements. And real quick, before I kind of go into that, the entire reason why you'd want to even make an S corp election is to save on the self-employment tax. That's the whole reason. And the self-employment tax, it's a flat tax rate of 15.3%. Before you become an S corp, essentially all of your money is subject to the self-employment tax. So let's say you make $100,000. Let's say your net income is $100,000. Before you become an S corp, how you'd come up with your self-employment tax is you take $100K and you'd multiply it by 15.3%. All of your money is subject to it. But when you make an S corp election, technically what happens is you become an employee. An employee-employer relationship is created between you and your own business, between you and your own LLC. And you're still the owner, of course, you still own this business, but for tax purposes, you become employed by it as also. And since you're an employee of your own business, your business will pay you a salary. It'll pay you a wage just like you'd receive if you work for someone else as a W-2 employee. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's go back to the $100,000 example that I used earlier, and let's also assume that you pay yourself $40,000. Let's just assume that's a reasonable salary for you in your situation. That first $40K is still subject to the self-employment tax. You can kind of think of it as a payroll tax at that point. But the other $60K, those are considered your distributions. And distributions aren't subject to the self-employment tax at all. So, in a situation like that, how you'd come up with your self-employment tax savings is you take 60 grand and you'd multiply it by 15.3%. So no, I'm sorry. You take 40 grand and you'd multiply it by 15.3%. No, oh my gosh, I'm so sorry. Your salary is 40,000 and your distributions are $60,000. I apologize, everyone. So what you do is you take $60,000 and you'd multiply it by 15.3% to come up with your potential S corp tax savings. And in that situation, it's around $9,100. So it's a pretty good chunk of change that this person would be saving in the self-employment tax. However, the question was, are there drawbacks to becoming an S corp? The drawbacks are additional administrative requirements, like setting up your S corp. No one knows how to do that, right? Paying yourself payroll, you have to do that with an S corp. S corps are required to track a balance sheet in their bookkeeping, and they have their own special tax returns. They have a business tax return comes into existence when you make an S corp election. So all of those things come into consideration when you have an S corp. And what we say is that if you expect to make at least $60,000 a year in your net income, that's when it's worth it. Because typically, with the amount of money that you'll save from electing S corp tax status at 60 grand, generally speaking, that number, your tax savings, will overtake Collective's annual fee or monthly fee. You'll save more money, generally, you'll save more money in the self-employment tax at that income level than you'll pay us to handle all your stuff. So really, the income levels to where people will say, okay, this is how much you need to make before you become an S corp, that's largely dependent on how much that person is going to charge you to handle all this stuff. If they're going to charge you more than what it'll save you, then there's no reason for you to become an S corp because you're not going to save any money. But if you do have an opportunity to save, a lot more in taxes than you're paying, a tax professional, then an S corp election becomes pretty advantageous pretty quickly. I'm a small startup that recently met the Collective profit requirements. I've been doing all my bookkeeping with Google Sheets. Can Collective help me reorganize? Absolutely. So you're a successful business owner now. You have other responsibilities. We need to get you out of Google Sheets. I'm proud of you. Like, most people don't even have Google Sheets, and it's a good idea that you're keeping up with your expenses and whatnot. So I'm proud, but you've got better things to be doing. You need to be running your business. So Collective will take over your bookkeeping completely. You don't have to worry about sheets or inputting information yourself anymore. We'll handle it for you. So we can absolutely help you reorganize. And schedule a call with us. Like, if you think that you've met the kind of profit requirements to where it's worth it for you, then go to our website, set up a call, send us a message here on Instagram, and we'd love to have a conversation with you. Just see if it would be in your best interest. I'm a current Collective member and have employees that are contractors. I want to switch a few of them into W-2. Can Collective help support this? No. We wouldn't be able to. So here's how I'll put it. Collective will not be able to give you advice on who should be contractors and who should be employees or anything like that. Now, and right now, if anyone currently has employees, I'm not allowed to sign them up. And other business advisors in the company aren't allowed to sign people up that have current W-2 employees. Typically, it's just a little bit more expensive to have them. It's harder for us to kind of manage it. So it's just kind of one of our requirements to join Collective is if currently you must have 0 additional W-2 employees. However, if you're already a Collective member and you need to switch the W-2, you can do so. It's okay. You can stay a Collective member. You can pay them W-2, but we just wouldn't be able to give you any advice on how to, how to convert them to it, who needs to be W-2 or anything like that. So just keep that in mind. I haven't started a business yet and saw that Collective helps with company formation. How does this process work? Well, we're certainly helping we're doing your formation. We will set up your company for you. But also keep in mind that that's just one part of it. We'll handle everything else for you too. So let's say that you're a new business and you expect to make, some pretty healthy income this first year. Like, let's say that you expect to make at least 60 grand this first year. There's no reason to wait. I'd go ahead and get started with Collective, and we'll set up your business, which is one of the first things that we do. And what that involves is setting up an LLC. That's the first step. Then we'll make an S election on that LLC, and that's what converts you into an S corp. So essentially, we'll set up your S corp. But then from there, of course, we would handle your payroll, your bookkeeping, your tax filing on an ongoing basis. So, like I said earlier, if you expect to make at least 60 grand, it becomes essentially a kind of a financial no-brainer to go ahead and get started. Why does Collective focus on businesses of one? Does the company ever plan on expanding that in 2024 and beyond? That is an excellent question. So here's the entire reason why Collective is a niche company. We focus on businesses of one. If we didn't, because right now, one of the objections I have, or one of the sort of, I guess, suspicions when I have, calls with prospective Collective members and then going through their situations, is sometimes they'll be a little skeptical that Collective can even do all of this. Because like I said, think of us as an all-in-one tax firm. So people will say, okay, well, that's a very reasonable price that you guys are charging to handle all of the stuff. What's the catch here? How is it even possible for you guys to do this? What is the catch? Here's the catch. The catch is Collective is a very niche company. We only go after a certain type of small business owner right now anyway. And that small business owner is a single member LLC, a single member business. That is the entire reason why we can charge such a reasonable price and be able to handle all the work that needs to be done on an account, is because that since we focus on a particular self-employed business person, all of our workflows between clients are very similar. So we're able to, because you guys and gals are all the same, you have all the same sort of general tax situations. So since that is the case, we can go through, make our workflows very efficient, build up really efficient processes, and are able to offer you this service at a less expensive cost. So really, it's in your best interest, especially if you're the type of self-employed person that Collective is kind of built for. But it's in your best interest that Collective is so niche, because it saves you money. We're able to more efficiently provide you service. Amanda from Instagram says, can you send me this recording? This will be available on the Instagram story. So you should be able to watch it over. What's the advantage of working with Collective versus my local tax advisor? I'm just going to say it. I have not heard a lot of glowing words of happiness and whatnot when people are discussing their relationship with their CPA or their local tax firm. It's usually extremely inconvenient. First off, getting a hold of kind of like a brick and mortar, and I have nothing against CPAs. CPAs are great professionals. There's a lot of CPAs that work here at Collective. I'm specifically talking about the brick and mortar sort of like old school local CPA sort of situation. It's really inconvenient. For one, it's brick and mortar, and you typically have to send them stuff in the mail or via email, or like there's no dashboards or anything like that. You have to go into the office. It's kind of a pain. And also, too, the lack of responses from that sort of situation I hear all the time. People will come to me and say, hey, I'm looking to make a change because I can never get a hold of my CPA. And when you're in taxes, it's important to be able to talk to a professional and get some guidance when you need it. So here at Collective, we have someone on your team called a member relationship manager. And you can essentially think of them as your account manager. So if you, as we go throughout the year and run your bookkeeping and taxes, if you have any questions, need some guidance on anything, we're here for you. You can reach out to your member relationship manager at any time and get some guidance. Also, if I would say general convenience. With Collective, all of your softwares, all of your tax tools are roped into one company, and all of your software costs are included in Collective's fee. So that's what I would say is certainly convenience. I heard that holding an LLC in Delaware is a good idea for tax advantages. Should I switch my LLC to that state? No, no, you shouldn't. Because unfortunately, that is some bad advice that has been told to LLC owners. Here's the kind of hoopla around Delaware. Delaware typically they do have a little bit more advantageous civil legal environment for businesses. And again, I'm not a lawyer, so don't take this as legal advice, but that is the general perception, is that Delaware's courts have more favorable terms and it's easier to go through the court system as a business in Delaware. However, if you're an LLC, you need to have your LLC wherever you live. To remain in compliance, your state of residence, once your LLC, if you're living in that state, you're making money in that state, doesn't matter if your clients are out of state. Doesn't matter if let's say that you live in California and a lot of your clients are in New York or in Florida. Doesn't matter. California wants an LLC registered in California. Now you can, and you still got to pay taxes. You still got to pay taxes to the state of California and whatnot. Even if theoretically it's possible, you can set up an LLC in Delaware and whatnot. But even then, the state of California would still want some sort of presence in their state, whether that's, a foreign registration, a conversion, or anything like that. And then you would typically have two entities that you'd have to deal with and two sort of annual fees that you have to pay. So no, generally it's not a good idea to just kind of form your business out of state, because the state of residence will likely send you a letter saying that they want an LLC in their state. Okay. What if you move several years after you establish your LLC in the state you currently live in? What if? Oh no. Okay, I see what you're saying. Yes, so that happens too, right? That happens sometimes. Is when you'll have an LLC in one state. Let's say that let's say that you live in Florida, and you have an LLC in Florida, and you move somewhere else. You move to California or something like that. There are processes like domestications, conversions, things like that allow you to kind of convert your Florida LLC into a California LLC. And that can be done with tax attorneys. There's some registered agent companies that will do that for you. You might even be able to get that done on a website like Rocket Lawyer or something like that. So if you ever move and need to move your LLC, it's typically you do one of two things: you convert that LLC, or you shut it down and you set up a new LLC in your new state. Do you connect with any billing softwares? Not really, but here's the thing. We don't really need to connect with billing softwares, because your billing software, it's handling all it needs to. Like, if that makes any sense. Like, it's billing your clients and whatnot. We're handling your accounting. So what we'll do is, we don't need to hook up to the software, but we need to hook up to your business bank account electronically. And as long as we have that, then we'll be able to automatically run your books and whatnot. And we won't need to be hooked up to any sort of external softwares, because this billing software that you use, like this external billing software, all the money that you're getting from this billing software that your clients are paying you and whatnot, it's ending up in the business bank account. So we'll be able to see those financial details even without being hooked up to the billing software. When can you pay your children from your LLC or S Corp, and what should it be? 1099 or W-2? This is a really touchy subject, because it's really risky to pay your children. Long story short, it is. Now, is it possible? Yeah, it's possible to pay your kids, but only if those kids are actually working in the business and you can prove it. But like we're talking prove it time and time again. Like, you need timesheets for them. You need some employment contracts for them. You need to be able to prove that they're actually working in your business and whatnot, because that's a red flag for the IRS. Is that increases your risk for audit because there's more sort of opportunity for abuse, people hiring their kids. So be extremely careful before you do that. Honestly, I would just kind of generally suggest that you don't do that. But if you do, just make sure that you can substantiate it and make sure that they're actually working for your business. Okay, I think I have time for one more question here. I may have missed this, but if you start your business as a sole employee and then you hire employees in the future to create an agency, does Collective still provide services for an agency? Sure. If you hire people later on, like after you're a Collective member and like as your business evolves, absolutely, we'll still be able to run your tax situation. And hey, Collective too, keep in mind, is an at-will contract. So let's say that if you ever get to a point where you need to go to a tax attorney, or you need a little bit more specialized advice or anything like that, we'll tell you, and we'll give you some good referrals, and you'll be all set. So absolutely, if you're interested in Collective, I'd certainly schedule a call and see what's going on, and then we can go from there. But that is all the time that I have left this week. It's a wonderful Tax Tuesday, like it always is. I enjoy this so much every week. And please, like I said, we'd love to talk to you if you're a small business owner and might be interested in Collective. So, go to our website, send us a message on Instagram, request a scheduled conversation, and we'll get you on the right track. But I hope everyone has a great week. I hope everyone has some happy holidays too coming up, and I will see everyone later.